Have you ever looked at a chart that is screaming sell, but a small voice in your head says, what if this is the bottom? Right now, everyone is watching the Strive Preferred Tokenized Stock trading under the ticker SATAon by Ondo. Over the last 24 hours, it has taken a sharp 5.5% hit, pushing the price down to $85.37. On paper, the trend is falling, the sell signals are flashing red, and the short-term weakness is highly visible. Yet, a vocal group of traders insists this tokenized asset is massively undervalued. So, is this a rare discounted buying opportunity, or is it a classic value trap designed to lock in retail liquidity? To understand why this asset is in sharp focus today, we have to look at what Ondo is trying to achieve. They are bridging the gap between traditional finance and decentralized finance by backing digital tokens with institutional grade real-world assets. In theory, this provides a highly stable, yield-bearing foundation. But when the broader crypto market faces volatility, even tokenized traditional assets feel the squeeze. Before we unpack the heavy technicals, do me a quick favor. Hit that like button, subscribe to the channel right now, and leave a comment below with your current strategy. Are you buying this dip, or are you sitting on the sidelines? Seriously, drop a comment. It keeps the algorithm happy and helps us build this community. Now, let's look at the actual charts. The trend direction is undisputedly bearish in the immediate term. Momentum indicators like the relative strength index are hovering near oversold territory, reflecting deep short-term weakness. We are currently sitting right on a critical support level around this $85 mark. If this level holds, we might see a technical bounce. But if the sell volume accelerates and breaks below this floor, the next major historical support line is much lower, and that is where panic usually sets in. Resistance on the upside is heavy, meaning any recovery attempt will face a wall of selling pressure from traders looking to exit at break-even. When you look at the aggregate analyst ratings and market signals, the outlook is grim. The consensus leans heavily toward a sell or strong sell. Volume profiles show institutional distribution, meaning larger wallets have been systematically reducing their exposure, leaving retail traders to absorb the downside. These negative signals suggest that the short-term bleeding might not be over just yet. This brings us to the ultimate debate. Is this a fundamentally undervalued asset, or is it a dangerous trap? The bull case is built on the concept of intrinsic value. If the underlying real-world assets managed by Ondo remain robust, this price drop is purely psychological, a temporary dislocation caused by market-wide panic. Bulls argue that buying an asset backed by treasury-grade security at a 5.5% discount is an absolute steal for the long term. But the bear case is loud, and the risks are incredibly real. Downside risks include severe liquidity fragmentation and the inherent volatility of the crypto wrapper itself. Retail traders often get trapped because they focus entirely on the dollar-denominated discount while completely ignoring the macro trend. They buy the initial dip only to realize the floor keeps dropping. If the broader crypto market suffers a systemic correction, tokenized stocks can face an aggressive continuation lower, wiping out leveraged accounts completely. So, where do we go from here? In the short term, the outlook remains highly uncertain, and the path of least resistance appears to be sideways or downward until a definitive accumulation pattern forms. Long-term believers might see this as a test of conviction, but trying to catch a falling knife without confirmation is a dangerous game. The numbers are on the screen, the indicators are flashing, and the market is completely divided. Will the support at $85 act as a spring for a massive macro recovery, or are we on the verge of a much deeper capitulation that will leave late buyers holding the bag? Tell me your move in the comments, and I will see you on the next update.